Welcome to a journey where your dream of owning property isn't bound by the size of your wallet. Imagine this. In just a year or two, you could be holding the keys to your very first property. And no, it doesn't require a fortune. What it does require is a strategic approach, designed specifically for those of us who aren't starting out with a huge pile of cash. Today, I'm going to show you how that dream isn't just a fantasy. It's a very achievable goal. Whether you're looking to diversify your investments, build your assets, or simply find a place to call your own, understanding the basics of real estate investment can open doors that you might have thought were closed to you. Stay with me, because by the end of this video, you'll see exactly how accessible and realistic investing in real estate can be, even with a little money. Let's turn that dream into your reality. Let's get started. Why real estate? The long-term benefits. Now that we've sparked your interest in real estate investing, let's dive into why it's such an appealing option. Real estate stands out as a cornerstone of wealth building, and for good reasons. First and foremost, it's stable. While markets fluctuate daily, real estate tends to increase in value over the long term. It's not just an investment in property. It's an investment in a physical asset that people need, space to live and work. This intrinsic value provides a stability that's hard to find in other investment forms. Next, let's talk about appreciation. Historically, real estate values have climbed. Even when there are dips, they are generally followed by recovery and growth over time. This means that the property you buy today could be worth significantly more in the future. That's not just good news. It's a pathway to growing your wealth passively. Speaking of passive income, that's another major draw. Imagine earning money every month without actively working for it. Rental properties can do just that. By owning real estate, you can collect rent that not only covers the property's expenses, but also provides extra income on top. This rental income can be a game changer for your finances, providing a steady cash flow that's relatively hands-off once you've set up everything. Now, let's compare this with other investment types, like stocks or bonds. While stocks can offer high returns, they also come with higher volatility. Your stock investments can swing wildly based on market conditions, which can be nerve-wracking. Bonds, on the other hand, are more stable, but typically offer lower returns. Real estate offers a unique blend of stability and potential for high returns, especially when you factor in the leverage you can utilize in property investments. As we continue to explore the avenues in real estate, you'll see how even a small initial investment can open up opportunities for significant financial growth. Stay tuned as we delve into understanding your financial standing and setting realistic investment goals. Understanding your starting point. Before diving into the world of real estate investment, it's essential to take a candid look at your current financial health. Knowing where you stand financially will guide you in making informed, strategic decisions. A crucial first step is understanding your credit score. This number is like a financial report card, and it can significantly impact your ability to secure loans with favorable terms. The better your score, the better your chances of getting lower interest rates, which means lower monthly payments and more savings over time. Another key aspect is your debt-to-income ratio, or DTI. This measures how much of your monthly income goes towards paying debts. Why does this matter? Because lenders use this ratio to assess your ability to manage monthly payments and repay what you borrow. A lower DTI can make you a more attractive borrower, which might lead to better financing options when you're ready to invest. Now, let's talk about setting realistic goals. When we say investing with little money, what exactly do we mean? It's not about the absolute amount. It's about what's feasible for you without stretching your finances too thin. Define little money in your own terms, based on your disposable income, savings, and investment capacity. This clarity will help you set attainable investment targets that don't jeopardize your financial stability. With these goals in mind, it's about moving forward intelligently. Investing isn't about pouring all your resources into a single venture. It's about strategically planning to ensure that every dollar is working effectively for you. In our next section, we'll explore how leverage can play a pivotal role in real estate investment, even for those starting with a modest sum. Stay with us as we dive deeper into how you can maximize your investment potential through creative and smart financing. The power of leverage in real estate. Leverage is a powerful tool in real estate investing, especially for those starting with limited funds. In simple terms, leverage involves using borrowed capital to enhance the potential return of an investment. For real estate, this means using a mortgage to purchase property, allowing you to control a large asset with a relatively small amount of your own money up front. Let's break down how this works. Suppose you want to buy a property priced at $100,000. Instead of paying the full amount yourself, you could use a down payment of $20,000 and borrow the remaining $80,000 as a mortgage. Now, if the value of that property increases to $120,000, your actual gain is not just on the $20,000 you invested, but on the total property value, which amplifies your return percentage significantly. Understanding the basics of mortgages is crucial for any real estate investor. There are several types of mortgages available, each with its own set of rules and benefits. For beginners, a fixed-rate mortgage might be appealing because it provides predictable monthly payments for the entire loan term, which can help in planning and budgeting. Adjustable-rate mortgages, ARMs, on the other hand, usually offer lower initial rates, which could be beneficial if you plan to sell the property before rates rise. It's important to consider the terms and conditions of each type of mortgage. Some may offer lower down payments, which can make entry into real estate investing more accessible. However, be mindful of potential pitfalls like higher interest rates down the line or balloon payments. By leveraging the right kind of mortgage, you can significantly increase your investment power and step into the real estate market more easily. Up next, we'll explore various strategies that can be employed even with low initial capital, ensuring you make the most of your real estate investment journey. Stay tuned as we delve into investment strategies that are tailor-made for those starting small. Investment strategies that require low initial capital. As we've explored the power of leverage, let's now look at specific investment strategies that make real estate accessible even if you're starting with a modest budget. These approaches can maximize your entry into real estate with minimal initial outlay. First up, let's talk about real estate investment trusts, or REITs. Real estate investment trusts are companies that own, operate, or finance income-producing real estate. They offer a way for investors to own valuable real estate, receive dividend-based income, and enjoy the long-term benefits of property appreciation without needing to buy property outright. Investing in a REIT is as simple as buying stocks, and it provides liquidity that direct real estate investments do not. This can be an excellent start for those who have little to invest but want to get a feel for the real estate market. Next, consider the strategy known as house hacking. This is a fantastic way for beginners to dive into real estate while also mitigating their living expenses. The concept involves purchasing a multi-unit property, living in one unit, and renting out the others. This strategy can significantly offset or even cover your mortgage payments and operational costs, making your investment more affordable while generating income at the same time. Lastly, partnerships can be a powerful way to enter the real estate market. Teaming up with others allows you to pool resources and share the financial burden. This collaborative approach can enable you to tackle larger, more lucrative properties or projects than you might be able to manage alone. It's crucial, however, to establish clear agreements and understandings with your partners to align your investment goals and strategies. Each of these strategies offers a unique way to start investing in real estate with little money down, opening up avenues to build wealth that might have seemed out of reach. Coming up next, we'll explore creative financing options that can further enhance your ability to invest with limited initial capital. Stay with us as we uncover more tools and techniques to grow your real estate portfolio intelligently and strategically. Creative financing options. Even with a solid strategy, the question of financing your real estate investment can seem daunting. But don't worry. There are creative financing options available that can help you get started without traditional bank loans. Let's explore some of these innovative approaches. First, there's seller financing, a unique opportunity where the seller of the property acts as the bank. In this arrangement, you, as the buyer, would make payments directly to the seller instead of securing a conventional mortgage from a financial institution. This can be especially advantageous if you have a less-than-perfect credit score or if you're looking for flexible payment terms. Negotiating a seller financing deal requires clear communication and a mutual understanding of the terms, but it opens up a pathway to ownership without the hurdles of traditional lending. Next, let's talk about government programs and grants. These are designed to make homeownership more accessible. For instance, FHA loans allow you to buy a home with as little as 3.5% down, and they are more forgiving of lower credit scores. USDA loans offer zero-down financing for properties in designated rural areas, aimed at helping to boost rural development. These programs often come with favorable interest rates and terms, making them an excellent choice for first-time investors who qualify. Finally, consider hard money loans. These are typically used for short-term investment purposes, such as flipping houses. While they come with higher interest rates than traditional mortgages, hard money loans can be a good tool if you need financing quickly and plan to repay the loan in a short period. They are usually asset-based, meaning the loan is secured by the property itself, which can be beneficial if your credit history or income might not qualify you for more conventional funding. By understanding and leveraging these creative financing options, you can overcome initial financial barriers and position yourself for successful real estate investment. Coming up next, we'll delve into how to minimize risks while maximizing gains, ensuring you make the most out of every real estate opportunity. Stay tuned as we continue to navigate the exciting world of real estate investing. Minimizing risks while maximizing gains. In real estate investing, the key to success is not just finding the right properties, but also knowing how to minimize risks while you maximize your gains. This part of your journey is crucial and can determine the long-term success of your investment efforts. Let's explore how market research, building a network, and understanding legal considerations play pivotal roles in this process. First, market research is your best tool for making informed decisions. Understanding the importance of location and timing cannot be overstated. The right property in the wrong area or at the wrong time can lead to underwhelming returns. By researching market trends, demographic shifts, and economic indicators, you can identify locations with potential for growth and stability. Timing your investments to match market cycles can significantly enhance your profit margins and reduce the risk of depreciation. Building a network is another essential strategy. Connecting with experienced realtors, knowledgeable lawyers, and fellow investors can provide you with insights and opportunities that might not be available through public channels. Realtors can offer invaluable information about new market trends and hidden gems within the market. Lawyers ensure that all your transactions are legally sound, protecting your investments from potential legal pitfalls. Fellow investors might provide partnership opportunities or offer advice from their own experiences, which can prevent costly mistakes. Finally, understanding the key legal aspects of real estate investment is critical. This includes everything from the correct structuring of your investment entities to compliance with local property laws. Ensuring that your investments are protected through proper legal channels can save you from future legal troubles and financial losses. This aspect of investing often goes overlooked, but can be the difference between a successful investment and a problematic one. By focusing on these areas, you can create a robust framework for your real estate investments that not only seeks to maximize returns, but also systematically reduces risks. Up next, we will guide you through a detailed step-by-step approach to making your first investment, ensuring you're well prepared to take that exciting step. Stay tuned as we continue to demystify the process of entering the real estate market. Step-by-step guide to your first investment. Now that you understand how to minimize risks and maximize gains, let's dive into a detailed step-by-step guide to making your first real estate investment. This roadmap will take you from the very beginning of finding a property all the way to successfully closing the deal, with a focus on managing your budget effectively throughout the process. First, finding the right property is about aligning your investment goals with the realities of the market. Start by identifying the type of property you want to invest in, whether it's residential, commercial, or a specific niche like multifamily homes. Use the market research you've conducted to target areas with growth potential or stable returns. Online real estate platforms, local realty listings, and your network of real estate professionals can all be invaluable resources in this phase. Once you've found a promising property, the next step is due diligence. This involves a thorough analysis of the property's condition, potential expenses, and profitability. Have the property inspected by a professional to uncover any hidden issues that could affect your investment. This is also the time to crunch the numbers. Calculate your potential return on investment, cash flow projections, and other financial metrics that will inform your decision. Negotiating the deal comes next. Armed with your research and inspections, negotiate terms that align with your investment strategy and budget. This might include negotiating the price, payment terms, or contingencies based on inspection results. Effective negotiation can significantly impact your initial investment and long-term returns. Closing the deal involves finalizing your financing, going through escrow, and handling a myriad of paperwork. Ensure you have a competent lawyer to help navigate the legal aspects and secure your interests in the contract. This is also when you'll finalize your mortgage arrangements if you're using financing. Budget management is crucial throughout this process. Keep costs down by negotiating not only the purchase price, but also by seeking cost-effective options for any necessary repairs or renovations. Manage your cash flow by planning for upfront costs, ensuring you have reserves for unexpected expenses, and keeping a close eye on ongoing expenses versus income once you own the property. By following these steps, you will be well on your way to making your first real estate investment a success. Up next, we'll wrap up with some final thoughts and motivational insights to help you take the leap into real estate investing confidently. Stay tuned as we bring everything together and prepare you to embark on this exciting journey. Conclusion: embarking on your real estate journey. Congratulations on taking this enlightening journey through the world of real estate investing. As we've seen today, the path to property ownership isn't reserved for the wealthy alone. It's accessible to anyone armed with the right knowledge and strategies, even those starting with relatively little capital. Real estate investing is not just about having huge sums of money. It's about making smart choices with the resources you have. You've learned today that with creativity, diligence, and a strategic approach, you can start building your real estate portfolio and growing your wealth. Remember, Every big investor started somewhere, and many began with just a small investment. Now, I encourage you to take the first step. Start small. Educate yourself further. Make informed decisions. The world of real estate is vast, and the opportunities are plentiful. It's up to you to take those lessons and apply them to your own goals. Start by evaluating your financial situation. Consider the strategies we discussed, and take that bold step toward your first investment. If you found this guide helpful and you're eager to learn more, don't stop here. Subscribe to our channel for more insightful videos that will help you advance on your investment journey. Every step forward is a step toward achieving your financial goals. So, what are you waiting for? Start today, keep learning, and take the leap into real estate investing. Your future self will thank you. Thank you for watching, and remember, the right time to start is now. Subscribe, stay tuned, and transform your financial future with real estate.